In this presentation, we will take a look at the chart of accounts and products and services within QuickBooks Online. These items are some of the building blocks, some of the items that must be set up, some of the accounts that must be set up, and products and services in order to drive the other processes, in order to drive the data input. So these are very important. Understanding these items will give us a better understanding of how the data input works. Note that the terminology will differ from the online version and the desktop version. In the desktop version, we may know these items under the lists dropdown. So we might call them types of lists if we're using QuickBooks, if we're used to using QuickBooks on a desktop version. So you will still hear people use the term lists to refer to these items, but they're not going to be under the same section in the online version. We still have, of course, the chart of accounts, and we'll take a look at that. The item list is what we call the products and services on the desktop version. So if you're moving or talking to someone on the desktop version and versus the online version, and they're talking about item lists, that's going to be the similar function or the same function, the same input, the same items that are needed in the products and services. For more accounting information and accounting courses, visit our website at accountinginstruction.info. We're currently in the demo QuickBooks file for Griggs Design and Landscaping. We're going to consider first the chart of accounts. So the chart of accounts can be found on the left side if the hamburger is open. Here's the hamburger. If we open up the hamburger, we're going to go down to the accounting. We'll see as we hover over the two items in it, if we select accounting, then we've got the chart of accounts tab and the reconcile tab. We want the chart of accounts tab. Here is going to be our chart of accounts. These will be the accounts that will be seen on the major financial statements, and that's going to be the major reports, the balance sheet and the income statement, or profit and loss as it's called on QuickBooks or with QuickBooks. We will set up the chart of accounts as we create a new company file, and typically QuickBooks will help us to do the setup process, providing a chart of accounts based on the company type that we have, which is very nice, very useful. If we go through the chart of accounts, it gives us a much better idea of the building blocks, what's going to be used in order to create the financial statements. Remember, our main goal, what we'll be doing most of the time once everything is set up, is going to be entering the forms, those forms then being used by the system to create the financial statements and post to the accounts in the form of financial statements, those accounts being here, the chart of accounts. So these are going to be crucial to that process. We have to set them up, and the setup process really helps us to understand the end result, the actual forms. So the chart of accounts is typically going to be listed in what we would think of as basically the accounting equation. The accounting equation being assets, liabilities, equity, income, and then expenses. And then it gets a little bit more specific than that with more specific types. In other words, we typically think of the chart of accounts as sorted by account type. It's not going to be sorted in alphabetical order. You'll note here that we're not in alphabetical order. It's not sorted by name. We could sort it by alphabetical order. We can select this item and resort the information by alphabetical order, but that's usually not the most useful way to find things or sort it. It's usually better to sort it by account type. If we wanted to search through the fields, we can of course use the Finder tab up top. If we look at the accounts type, what we mean by assets, liabilities, equity, income, and expenses, you can think of the balance sheet. You can visualize the balance sheet set up on top and the income statement basically on the bottom. The balance sheet has assets, liabilities, and equity. Where we stand at a point in time, the income statement has revenue and expenses. We'll break it down a little bit more in terms of specific balance sheet type accounts like cash. Cash is an asset. The bank account, we'll say here, bank is an asset, bank is an asset. We've got accounts receivable, that's an asset type account. Notice it's in order of liquidity. And then meaning the things that are going to be closest to cash. And then we have other current assets, which is a general category. Obviously in the banking accounts, we got the checking account, the saving account. Accounts receivable is the name of it and the type. So the type and the name will be the same. We have inventory assets in the other current assets, prepaid expenses, other current asset type, uncategorized assets in other current assets. Note here that we have all other current assets, and within that section, then it's in alphabetical order. So inventory, prepaid, uncategorized, undeposited. So we're going to be first organized typically by type. This is just a general rule, and then by the name. And then we've got fixed assets, large assets, depreciable assets like the truck here. Then depreciation, also a contra asset. We'll talk about that later. Let's go down to the liabilities. We got the liabilities, including accounts payable. So here's the accounts payable, has the same name as the accounts type. MasterCard, this is going to be what we owe to the credit card company. That's going to be a credit card type account, a liability type account. Visa, liability type account, credit card type account. Then we have other current liabilities. Now we are into the liabilities section, and we've got the Arizona Department of Revenue. So it looks like some type of taxes in the other current liabilities, and a couple areas in the other current liabilities. Long-term liabilities. So remember assets and then liabilities. So, and then now we have long-term liabilities. Those due past a year typically. Notes payable. It's going to be the account. Then we have the equity section. Assets, liability, equity. That's going to be the accounting equation. Equity. Opening balance is an equity account. We'll talk about that later. It's a special QuickBooks account. Retained earnings is going to be an equity section. And then we go to the income statement. Now you're imagining the income statement on underneath the balance sheet. So we went to the balance sheet, assets, liabilities, equity. Now we're underneath that. We're on the income statement. This is kind of like a trial balance we're visualizing here. So then we've got typically income accounts. So here are the income accounts. Usually we don't have as many income accounts as we do expense accounts. Here's kind of an exception because of the type of industry that we are in. We have a lot more income accounts than many other types of industries. But we have the income accounts, cost of goods sold type account, our major expense type of account, matching the name here. Then we've got all other expenses. So all the other expenses, and within the expenses, probably the category will have the most items in it. Then of course, within the items, they're in alphabetical order within the expense items. And that's going to be the major account types within the chart of accounts. As we set up the accounts, note that they will typically be set up by QuickBooks if we choose the industry. And then as we enter data, we can add new accounts to the chart of accounts. So we'll usually, and when we run the process, when we start the data input, we'll start off with what QuickBooks gives us, and then we can customize from there. That's typically what most people do, although it can be nice sometimes if you are daring enough to do all of your own accounts, because then you only have the accounts that you specifically need, and that could be a good way to go as well, especially if you're in an industry where the accounts may not be as standard as some other industries. So, but usually we'll start off with the chart of accounts from QuickBooks. Up top, we can add a new account if we need to. We'll take a look at this when we start to enter data into the system. And then, of course, we have the registers. Now, this is specific to QuickBooks in some ways. We've got the registers, and registers are a way that QuickBooks allows us to not do debits and credits mainly. So the checking account, we're used to seeing the checking account register, and that looks kind of like we might see if we were actually going to manually enter checks. If anybody still has the manual enter checks in the checkbook, we can have a register related to it, which looks kind of like this. And we can imagine just tracking that information, payments, deposits, balance. Now, if we go back to the chart of accounts, then we also have a similar process for all of the other balance sheet type of accounts. So we have a similar type of register. Now, if we choose another balance sheet account like inventory, if we go into inventory and say view the register, we'll see a similar type of register, and we'll be able to see this transaction not with debits and credits now, but with increases and decreases. The increase and decrease not being to the checking account, but to whatever register we happen to be in this case, inventory. So we know then this is going to be the decrease to inventory. The other side will then be going somewhere else, some other account, in this case, accounts receivable. So we have the same kind of two account transaction as we would for a journal entry, but we're avoiding the need to know what debits and credits are. We'll use these as much as possible to enter into the system and avoid the journal entries, but when we need the journal entries, we will point them out, and we'll point out the debits and credits from time to time just to give a comparison and an example of what QuickBooks is doing and how it is using debits and credits, but it's basically masking it in plus and minus as much as possible to make the data input as easy as possible. So these registers are really useful if we say use this drop down and there's no form for us to enter something. In other words, if it's not a normal type of transaction, there might not be a form for it specifically. And we're going to go, I don't know what to do. I don't know how to enter this in here because it's not just an invoice. It's not a normal thing that's happening. How do I do it? Well, anytime that happens, you can think, which account? Is there a balance sheet account that I'm supposed to use? Let's start there. Let's go to the balance sheet account. Let's go to the register. and see if we can enter it directly into the register. When you do that, you can't use the income statement accounts. However, you don't have that same option. So the profit and loss accounts, if we scroll down, you'll note we don't have the view reports for anything below on the profit and loss reports. All we can do is run the report. We don't have, in other words, the register. We can run the reports from here. If we consider our reports, our main reports, go into the reports on the left side, that being the balance sheet and the profit and loss, they're currently under our favorite reports. If we go to the balance sheet, we'll see the familiar layout, the familiar list that we had in the similar order. Well, we've got the assets up top, including the checking account, the savings accounts, the accounts receivable, and you can see how these basically fit by type. It's in order by type. The forms are in order by type. So as we enter this information into the chart of accounts, as we enter new accounts, we need to consider where they're going to fall on the balance sheet and then put it into the correct category. Should it be a current asset? Should it be accounts receivable? Should it be an other current asset? Should it be a fixed asset? That's what's going to determine where it will lie on the financial statements. If we go to the profit and loss, back to the reports on the left side and check out that one, that's going to be in our favorite reports as well, of course. So we'll go into the profit and loss. Now we've got, remember the second half, we're imagining the balance sheet on top of the income statement for the chart of accounts. We had assets, liabilities, equity accounts, balance sheet, income statement accounts, income and expenses. So income accounts up top, and then below the income statement accounts, we're going to have cost of goods sold, and then we've got the expense accounts. They're grouped into a lot of subcategories here with this particular income statement, but you'll note that these are all going to be the expense accounts. That'll be the typical layout. That'll be the chart of accounts and how the chart of accounts will feed in and be used to create the financial statements from the data that we will be entering into the forms, generally these items. For more accounting information and accounting courses, visit our website at accountinginstruction.info.